I'm Siboniso Nxumalo, a portfolio manager at the Old Mutual Investment Group. Over the last couple of weeks, we've received some of your stories and your questions on topics of savings, investing, money, big topic of crypto. Over the next couple of weeks, we will engage with those topics. So let's talk money. Let's talk investing. Let's talk how to build wealth. Let's talk financial freedom.
Hi, I'm Jody. I'm 28 years old and I am a cybersecurity consultant. I have made bad financial decisions. I think over the years you learn, what is good and what is bad with your investment strategy, where to learn from. I specifically made some bad decisions around trends within the market to invest in, around shares and crypto, etc., as well as lifestyle issues and bad financial decisions with regards to that, specifically with cars and investing more than you should have within a car. So I've definitely made a few of those mistakes when it comes to financial decisions. I think it's always a thing that's on top of your mind because you always think about wanting to make a profit, but depending on what the market is, you could lose money. That's why it's always important to do your research on what the market is like, what the industry is like, and what are some of the things that could potentially cost you to lose money. So it is always at the back of your head, but it should never be a fear because that's what making money and investment is about. I definitely do find that I am getting that type of growth, but sometimes the growth is dependent on the market and the industry and things. And with the pandemic that's hit, a lot of the companies haven't had major or very well profitable returns, which will, essentially make you more profitable from your investment perspective. But from a direct return, from what I've been involved in, the property side has definitely been my biggest return, and where I've made majority of my money and will probably continue to keep investing in and wanting to do more in that. I think responsible investing is, what is really important to you as well as what is your financial well-being. So when it comes to being responsible, what are you allowed to lose, what are you not allowed to lose, and what is material to you from a financial impact perspective. So it's responsible to ensure that you don't overcapitalize and put too much in when you're struggling or you may be not in as great as a financial position. So it's important to be responsible by understanding your position, what you can afford, what you want to invest in, and doing the necessary research in doing all of that.
Hi, Jody. I like what you're doing. I think you're doing some great things. From what you're trying to do with your investment, how you think, it's brilliant. Just like I wish at your age I was thinking that clearly. Jody, there are a few things that I want to deal with or talk to about you. When you talked about your financial mistakes, we all make those. I made a lot of those. And one of the things that you talked about there was you talked about you like doing your research. Brilliant. I think it's a brilliant thing. And you like doing your research and you want to get to know. And some of the mistakes you made was buying the wrong company or buying the wrong shares because you hadn't done enough research. So, what the most astonishing thing is, Jody, in terms of markets, is that in life, like you are a cybersecurity consultant. So when it comes to my cybersecurity at home, I don't sit there and say, oh, you know what? I'm Sibo. I'm a guy who works in financial service. I'm a professional investor. And I'm going to go and do some research on the side on cybersecurity. And I want to find out how it works. When I'm sick, I don't go to the doctor. The doctor says, this is what you should take. And then I sit there and I say, oh, I'm going to do this on the side. I'm an investment guy. That's my job. That's what I do. That's what I'm an expert in. You're a cybersecurity guy. That's what you do. But what amazes me sometimes with money, which is something that I think actually we need to think more of. When it comes to our finances, everybody wants to do their own work. And I'm not saying that that's wrong, but I'm just saying apply your mind to it. So if I look at us at the Old Mutual Investment Group, we've got teams of professionals who studied, who are smart, who do this day in and day out. They go and visit the companies, they go and see the management, they go into global conferences, local conferences, they go to the factories where the products are manufactured, they talk to global people and local people all the time. They do real research, I suppose. They understand what's coming in the industry, what has been, what's changing. So, and then they come with all of this information, they debate it with other experts, we debate it within the team, and then we make a decision and say, we're going to invest in this company because that's what's happening, that's what's coming. We've met that guy, we've met the supplier, we've met the buyer, we've met the distributor, we've met the competitors and asked them. We've done a lot of work, a lot of hours. This is the day job. After doing that day job, we come up with a decision and say, okay, this is a sound investment on behalf of our clients, or that's a bad investment on behalf of our clients, and we make those decisions. So then, but when it comes to investing, once more, people always seem to have this thing that actually I must control it, I must do all of it, and I'm the expert. Now, you are a cybersecurity consultant, so your day job is that, and that's wonderful. That's a good thing. But actually, why do we think that we can spend maybe an hour or two a day and make amazing decisions over 40 years relative to giving some of that investment to professionals who spend all day, every day, thinking about your money, where to put it, where to take it away from, where the world is shifting, where it is not. It's just something to think about, because we don't do that in any other aspect of our lives. We trust that there's an expert. But when it comes to our own money, we actually just think, I want to do it myself. And when we do it ourselves, we also have this tendency, which is why I suppose we'll deal with this in another episode, crypto has become a thing because it's today. But actually it's got nothing to do, wealth has nothing to do with today. Wealth has got everything to do, again, what happens 10 years, 20 years, 30 years, 40 years. So one of the things that I'd love to say, Jody, is that yes, there's nothing wrong with you being educated in the market, doing your own research and all of those things. But markets are competitive. And you, by allocating your own money, are also competing with lots of professional investors at reputable investment houses who do this while you're doing cybersecurity. I don't compete with you in cybersecurity. So actually, can you really, over 40 years, compete with these big investment teams in investing? It's a question that I think we should think about. The other thing that I'd love to talk about is responsible investing. This is like the new thing, the buzzword. What is responsible investing? Investing responsibly. Investing responsibly actually has very little to do with you or me as an individual. Responsible investing, if I give you an example, is to say there was in the Gulf Coast in America a BP oil spill. Google it. BP oil spill was fascinating because British Petroleum, large oil company, one of their wells deep in the ocean on the Gulf of Mexico in the United States of America, that Gulf leaked oil and poisoned the entire coast. It cost billions for BP to fix it. Now, think about it this way. If you're an investor in BP and you didn't quite care about whether or not the environment mattered, trust me, after that oil spill, suddenly your investment, those shares, they came down, and they came down quite a lot. You lost a lot of your capital. Why? Because actually the environment matters. So what does investing responsibly mean? What does ESG, environmental, sustainability, and governance? It means that whatever you are investing in is conducting their business in a way that is good for the environment, good for society, and in a way where governance is good, or how it is run in an ethical and a manner that's full of integrity. Why are those important? Because let's start with governance. If companies are not run with integrity, then you get an example like Steinhoff, a company that's the biggest financial scandal to have happened in South Africa, where clients or pensioners and savers lose billions. That's what happens when the governance is not good. Society. If you think about society, I'll use an example like the mining company Lonmin, where there was a massacre, again, a couple of years ago. You Google it, it's a sad thing, where you have a mining company that doesn't take care of the society that it hires people to work in the mines. It doesn't take care of their workers. The workers get disgruntled, the workers get unhappy, the company doesn't engage. Next thing, there's a massacre, and actually if you look at what happened to the share price of that company, one of the biggest tragedies in the country. But if you're an investor, you had lost a lot of money. Eventually it got taken over by another company. But that stain still lives. Why? Didn't take care of the social aspect of their responsibility as an investment. The last one, environmental. I come back to the BP oil spill and say, if you're an investor in BP, before the Gulf oil spill, you were sitting pretty, you were fine. Now they dirty the environment. Then what happens? Then there's a liability. They have to clean it up. It took them years and billions to clean it up. Loads of fines, loads of court cases. Why? They didn't take care of the environment. So what is responsible investing? Responsible investing is that if you are going to grow your wealth by investing in a specific company, make sure that that company is doing right by the environment and the planet that we live in. Because if it doesn't, that investment of yours is going to come down and you're going to lose money. So responsible investing, just pay attention to what you're investing in. Comes back to my first point about actually who's doing the research on the environmental stuff. So when you're looking at your investments, are you looking at it and saying, it's cheap, I'm buying, or it's going up, I'm buying? Is part of your research then saying, actually, what are the company's ESG credentials? What are they doing with society? Us as professionals, I suppose, we get to talk to the companies. We get to ask them. We get to go and ask, how is this going? What are you doing there? And when we find issues, we deal with them. We deal with them aggressively. We write articles in the press. We engage with the companies. There's several that we've engaged with in South Africa. Why? Because that's our responsibility, is to make sure that companies can sustain themselves. So thank you very much, Jody. You're doing some fantastic things. And who knows, maybe one day I will be needing a cybersecurity consultant.